Now, please welcome to the stage Theo Argytis, Senior Vice President of Policy at the Business Council of Canada.
Why don't I introduce to the stage the three panelists as well. Philippe Adam, CEO of Pomerleau, Andrew Alley, Head of Infrastructure for North America at CPPIB, and Duncan Ball, CEO of BBGI Global Infrastructure, which is owned by the BC Investment Management Corporation. Is that correct, Duncan?
Yes.
Yeah. All right. Well, good morning, everyone. My name is Theo Argytis. I'm Senior Vice President of Policy at the Business Council of Canada. It's great to be here to talk about one of the most pressing questions for Canada right now. Perhaps the most important question for the Canadian economy is how do we actually get the infrastructure we need built? And governments at every level have big ambitions, housing, trade, energy, economic infrastructure more generally, including technological infrastructure, and now new defense industrial capabilities. But budgets are tight, and if we're relying mostly on public finance, it just won't work. So that means private and institutional investors like yourselves will be needed to get the projects done. The challenge is, despite all the capital and the expertise available, too few projects in Canada are reaching the point where investors are saying yes. So the barriers are real, but so are the opportunities. The goal today, we'll figure it out here on the panel, I'm sure, is what needs to change to get more of these maybes into yeses. So we have three people here who I've just introduced who live this reality every day. So let's just start by setting the scene a little bit. Each of you are players in Canada's infrastructure landscape. Can you just give us a quick snapshot of your footprint in Canada, the projects you're involved in or your portfolios, and maybe a little bit on what your ambitions may be here as well. Why don't we just, we'll go across the floor. We'll start with Duncan there at the end.
So the company I run, BBGI, was until recently publicly traded in the UK. We were on the London Stock Exchange. We have 56 assets globally, 17 of which are in Canada. So Canada was our largest exposure, 35% of our portfolio. Earlier in the year, I guess it concluded in June of this year, BCI, the provincial pension scheme, bought us and took us private. So that was an endorsement by them. They have about just under 300 billion AUM, and was a big investment into Canada by delisting the UK public company. So our ambitions, we have projects in Alberta, or BC, Alberta, Saskatchewan. We don't have anything in Manitoba. We'd love to. Ontario, Quebec, New Brunswick, Nova Scotia, and Northwest Territories. So we're well diversified across Canada. They're all public-private partnerships. So Golden Ears Bridge is an iconic project in BC, Canada Line. In Alberta, we have a number of the ring roads. We have Women's College Hospital here in Toronto. We have an investment in McGill University Hospital and the Champlain Bridge in Montreal. And then we have some other projects in the Maritimes and a hospital in Northwest Territories. So well-diversified Canadian portfolio. We would love to do more in Canada. So the topic today is very timely for us.
All right. Andrew?
Hi, everyone. Just by way of intro, Andrew Alley. Been with CPPIB about 18 years, lead our North American infrastructure business. I've been in a number of our global offices around the world, been back in Toronto for about 5 years. So maybe just a little bit, people would be familiar with who CPPIB is, but just a little bit about our mandate. Single purpose mandate, investment-only mandate to maximize retirement benefits for the 22 million contributors and beneficiaries that we manage the funds for. The fund has grown to be about $700 billion. A lot of that through investment income that we've generated, about $500 billion of that. We're continuing to grow, forecast to be a little over $1 trillion by the end of the decade, or by 2031. I sit in the infrastructure team. Across infrastructure and energy, we have about $90 billion invested globally across key aspects of the infrastructure space, such as transport, digital, utilities, and then in energy, anything commodity related, from power generation through to upstream, midstream oil and gas, LNG. And then when we bring it back to Canada, Canada is a big focus for the fund. We have $114 billion invested across the fund in Canada. Some of our largest investments, including 407 ETR that I've sat on the board on for the last 15 years, are in Canada, as well as a number of energy investments. And I think what I'd say, and very much looking forward to this conversation, we're really encouraged by what we're seeing in the current environment. When we look at what's happening from a trade perspective, it clearly identifies a need for investment here and a will to make things happen. And we're matching that with a desire to really lean in and make an impact here in Canada.
Philippe?
Hi, everyone. Thanks for having us. Happy to be here with you, Duncan and Andrew. So, Pomerleau was founded 60 years ago in Quebec, and it grew a lot since then. Now we have 10 offices across the country. We're in the top 3 in terms of size, with $6 billion of revenue, backlog of $18 billion, and I would say we're probably the most diversified construction company in Canada. We're doing lots of civil work, big projects and complex one. In terms of building, we're doing commercial, institutional, meaning hospitals, schools, and residential as well. And we have 3 subsidiaries. One is ITC. It's the largest residential construction company out west. Second subsidiary is Borea. Borea built approximately 40% of all the wind farm and solar farms in existence in the country. And the third subsidiary is Pomerleau Capital. Pomerleau Capital was founded 8 years ago as our capital arm, and now we have an investment fund, $250 million of equity to invest in the project we are building. And these subsidiaries are all collaborating together. A good example of that is the project that we just announced last Friday, a couple of days ago. So it's office residential tower conversion to conversion to residential tower in Calgary, in the downtown core. 166 unit in partnership with Dream, a developer well known, and we are investing our own capital and we are building it. And 27% of that tower is affordable housing. So we're really proud of that type of projects where all of our business units are collaborating together. And in terms of vision, I would say that we're looking to reach $10 billion in revenue only in Canada in the next 5 years. But what's important to us is staying true to our values and our culture, and to the topic of today, building a better country as well.
Mm-hmm. And where are the greatest opportunities now in Canada at a high level? We'll talk more about maybe specifics later, but in terms of where where there's a real need and opportunity as well for private capital to do some heavy lifting on infrastructure. Where are the opportunities?
I can start. I would say port and transportation definitely is one, the backbone of our industry. We all know we need to diversify our export and economy. And one of the 5 First Nation projects named by Carney was the Port of Contrecoeur, which we are building with Aecon, who are here as well today. Second, there's the renewable industry. It's going to grow by 9% every year for the next 5 to 10 years. And if you include in that renewable sector hydro and nuclear, it's like $50 billion of investment a year. And definitely for us, social housing, of course residential, we're going to need to build 500,000 homes a year. And then with the aging population, you can think about long-term cares, hospitals, schools as well.
Outside of hydro and nuclear, what is renewable for?
Solar and wind farms. That's lots of projects. Just in Quebec, there's 10,000 new megawatts being built in the next 10 years. BC, they have a lot of projects on the go. Ontario, same thing. Alberta as well. So lots of opportunities there.
Andrew?
Yeah, I think one interesting thing about this panel is we cover a broad range of types of infrastructure investments here, and the needs are broad. When we think about how that translates for us, one thing that we're very encouraged by is I think when we look at some of those needs, they align a lot with investment themes that we're looking to get behind as CPPIB. For us, energy transitional and digital are our biggest themes across our infrastructure and energy books. It's moving energy around, whether it's transmission, whether it's midstream energy. And then on the digital front, the opportunity to be setting up infrastructure to facilitate AI growth in Canada. I know there's some focus on that as part of these sessions over the next 2 days. They align completely with our global investment themes.
Okay.
Yeah, I would echo what's already been said. The framework I like to think about is D's. My first name's Duncan, so I'll use D's. So it's decarbonization, it's digital, it's the decaying nature of our infrastructure that needs to be improved, it's demographics and aging population driving the need for hospitals and healthcare investments. But more recently, it's deglobalization. I think people are re-looking at supply chains and moving things back, and the impact of tariffs and what that has on the deglobalization impact. And then it's also deficits. Governments around the world are facing large fiscal deficits and need the private sector to invest. And then more recently, I think people are thinking about defense a lot more. So we're seeing projects that are defense related or some way coming back to that theme. So these are a good way of describing infrastructure right now.
So deglobalization, so the fact that countries are focused on, I don't know, for lack of a better word, resiliency and redundancy in many instances, that's actually an opportunity for you guys?
Yeah, it's an opportunity, but it also has ramifications. We're looking at a portfolio of toll roads right now, and one of the key selling points is the onshoring of manufacturing and what that's going to do for traffic demand in the region. So it's unintended consequences. Digital isn't just about building AI centers, it's data centers. It's about refurbishing the grid and repositioning the grid and all the ancillary steps that are needed to make our economies efficient.
Okay, let's move to the investment environment, some of these barriers and what we can do to kind of make it to facilitate the flow of capital into these projects. And I'm going to stick with you, Duncan. I mean, you manage capital across many markets. When you compare Canada to other jurisdictions, how does our investment environment stack up?
I think Canada does well in that regard. Capital is very mobile, as we all know, and we're active in Australia, the US, Canada, Netherlands, Germany, Norway, the UK, and we're constantly looking at jurisdictions. I think Canada has had a very good track record. There are some areas where it's been a bit challenging. I would say the EIFEL legislation, so the excessive interest finance legislation, was a bit of a wake-up call where I think a lot of participants had participated in the market on the understanding of a certain treatment, and then that was retroactively changed. So that was a bit of a sore spot for many. But I think other than that one exception, Canada's had a very stable environment, good rule of law, well-established processes. So you couldn't really ask for a better environment to want to deploy capital into. And
if they don't reverse EIFEL, what are the implications there?
I think it's one of those things that it was an unintended consequence from doing the right thing I'm not a tax expert, so I don't want to divert the conversation, but I think they did the right thing in terms of addressing base erosion, profit shifting that most countries are going through, but I think it was a particular nuance in the legislation that maybe could have been done a little differently. But it's particularly punitive to the people in this room that are dealing with PPPs, because PPPs typically have a lot of leverage and the legislation that was brought in affected the interest rate deductibility of some of that leverage, and so the goalposts changed midway through the process. So that was a bit of a black eye, but you know, on a relative basis, there's certainly lots of other countries that are less investable than Canada. So I don't want to make that an overwhelming point of the conversation. I think Canada is a very investable country. We'd love to do more, and it's just finding the right opportunities.
Andrew, Canada's pension funds, the Maple 8, are among the largest infrastructure investors in the world. Much of that is invested abroad, which makes sense. You need to diversify. But what would it take for more of that capital to stay here? What can be done to keep more of that capital at home?
No, it's a great question, and I think I would echo many points Duncan raised about Canada as an investment destination. We think Canada is a great place to invest, and as you alluded to, there's no shortage of capital here. We have material appetite to invest in Canada. Many of our peers do as well. So when we look at someone with a global mandate like ours, we look through a relative value lens. How does risk return stack up on a global basis? Canada has a number of the fundamentals that can stack up very well. When we look at the nature of the country, we look at the infrastructure demands in front of us, so we see a path to that happening. So when we think about specific projects and how can risk-adjusted returns stack up for us, I mean, another thing I'd say is the risk doesn't have to be zero. We are happy to price risk. I think it's a function of when big projects are happening, how is that contained, and how is there a path to us pricing that accordingly and seeing a path to stable revenues and stable returns as a result. I think that can be done in a number of different ways because people like ourselves have a lot of flexibility in how we invest. There's not a one-stop shop for how something needs to look. We can assess things on a flexible basis and compare it to other global opportunities.
And I mean, if you look at the government's agenda, the current government's agenda, you look at energy, trade, housing. How do you feel that aligns with the kind of the objectives of the pension funds? Is there any kind of alignment there that you think that is particularly kind of important right now?
Absolutely. I think it goes back to what I said earlier. What's good for the country and what the needs for infrastructure are of the country align a lot with our infrastructure and energy strategies right now and the global themes we're looking to invest in, which is a reason we're so excited about the opportunities here in this market. I think energy and digital being primary ones, but when we go beyond that, things like transport, that's been our biggest exposure globally. We're always looking to build in that area as well. It links to a number of demographic trends that we're also looking to get behind. And as Duncan mentioned earlier, some of that, the concept of deglobalization, it can go both ways. Maybe there's some impact on trade as it relates to some of the port investments, but then a lot of stuff happening within the country and the infrastructure needed to support that can be quite attractive.
Philippe, you bring a kind of a different perspective here, but both builder and investor. What does it mean, kind of, when you think about what does kind of the investment environment look like to you? Like, and how, for example, could it be different than maybe Andrew or Duncan are looking at things?
It's slightly different. I mean, for what I like right now is there's a nice evolution on the private sector side and the public sector side in terms of being more welcoming to private investors. And in our case, I mean, with private clients, it just helped the projects to get off the ground quicker. We're doing 1,300 student units in BC with a clients of ours, and he needed capital, and then it helped kick off the project. Same thing, we're doing a manufacturing plant that we did, in Quebec, and our client was an investment-grade large manufacturer, but he needed capital, but also he needed to manage his balance sheet. So we said, all right, we're going to build that plant for you, but we're going to finance it for you as well, and we're going to rent it to you for 20 years. So in that case, it helped the client to get their facility faster, and it's for the renewable industry, so that was all good. And it helped us to get an investment which diversify our revenue, but at the same time, for the client, it creates a better alignment as we're the builder and we're a partner with them. So we're definitely, have our interest aligned.
Well, Philip, is both investor and builder. Do you, as investors primarily, do you partner with builders in any way? Like how does that? The question to Andrew and Duncan, is that something that you think about at all, or you're just financing?
I'm happy to start. I mean, absolutely. I think partnership is critical for us. We don't have the shovels. We have the capital that we look to bring to investments. We have the global investment expertise on where we've seen successes in setting things up globally, but we're not. We have some platforms wholly owned, but we're not a developer. So partnership is critical to us.
And we will provide capital during the construction phase. We're equally happy to provide capital once things are through construction. So we're not as active as a developer as many in the room here as they would know. We tend to try to provide liquidity for companies like Palmer Lowe or other builders that take them through the construction period, de-risk them, and then we're happy to purchase de-risk projects at a higher price. We're also happy to participate up front as shoulder-to-shoulder partners, but the challenge is we have we have a lot of capital and a small team, so it's often easier to come in later than earlier. But I think there's a good question there in that when we talk about risk, we're not at risk adverse. We're happy to participate in the earlier stages when the risks are higher, and you get a return for taking that risk. I think part of the challenge right now we have in Canada is it's very hard to do projects when risks can't be managed and they're unknown. So, we talk about tariffs right now. If you're we have an investment in the Champlain Bridge, it would be if you were building that bridge today and you were ordering steel, it would be pretty hard to know what number to carry because just of what's happened in the last week. So I think that's an area where we talk about making Canada investable. There's a lot of global macroeconomic factors that are making it very hard to navigate, and some of these large projects that we're talking about have long durations, delivery durations, and lots can happen in there, and it's very hard for the private sector to be able to manage or take on that risk without some level of partnership with the privates, between the private sector and the public sector to manage those risks.
Okay, well, then this question is for the three of you as well. So in this environment now, because it's not your typical risk, it's the unknown unknowns, not just the known unknowns. How does the government, or what does the government need to do to de-risk these sorts of unknowns? Like what is, in this environment, geopolitical kind of uncertainty and, just a lot of global fragmentation, how does the government help de-risk these projects?
In our case, for these large projects especially, the collaborative model is really, really important. And what I mean by collaborative is to collaborate from D0 with the government, with the client, the owner, meaning that we can implement innovation early in the project, we can manage health and safety, but also we can develop solutions, scheduling, we can select the material together. So for us, the collaborative model, de-risk the project first, but also create economies between 20 to 30% in terms of cost of the projects, because we are there with the client, making the right choices at the beginning, implementing the technologies. For us, it's really, really important. And we believe that the right model for the right project. So for us, it depends on the size of the projects, but usually the collaborative model are a good way to de-risk the large project, like Duncan was talking about.
So maybe a few points on the risk. There's the risk of the timelines and cost, and that part of the project where that's more difficult to size or to price. Those are the areas where some government de-risking could be very beneficial for a number, and there's a number of experiences in the room here of where that's happened in Canada. For us, when we really look to go and make a material investment at scale, it's really that sizing and that risk around the commercial viability and the revenue model of the project. And there's things governments can do to make that work from a numbers perspective, from a risk return perspective. But we tend to step back and also take a lens. Well, if something needs that much and it's too good to be true, we kind of like to see, maybe some things are needed, but a path to the commercial viability on its own. And we've done that in different ways. We have a lot of flexibility in how we invest. Like if I think about examples in Australia, we've built most of the tunnels under the city of Sydney across 2 projects, highway tunnels. There's a commercial rationale for those tunnels, but there was some things that needed to happen to make the return stack up with the cost we were putting in. And one example.
And what was that? What needed to happen?
Yeah, so here's a couple examples. I think one was we funded the construction of tunnels, but there was another existing asset that got combined. So we had an overall revenue picture that included an existing asset plus the new stuff we were building. So that was an example. I think in another example, we were able to link our investment to something we already owned, make changes to the concession that way to just create an overall revenue model when combined across the project made sense. There are a couple of examples of just thinking a little bit differently, contributing assets, contributing in other ways that aren't just the government writing a check. There's obviously things with the revenue models and other things that can be done, but it's got to make sense for the users as well.
Duncan, I'm hearing here that it's not about the check. Is that how you see it as well?
Yeah. I mean, it's all about understanding risk and how do you mitigate those risks and what are the unknown unknowns. If you had bid a project in 2018 that then was delivered during COVID when we had unimaginable spikes in inflation from where they had been the last 15 years, you would never have won that project if you'd carried anything other than a 2% inflation number in your fixed number that you had to bid to government. So it's having those understandings. When the world changes, do you recognize that some of those risks could not be managed properly? Others are risks that the private sector should be able to take on and manage well, but some are outside the realm of what can be managed realistically, especially for these projects that often have very, very long duration construction periods or life cycle periods. So it's the flexibility to revisit things if you're delivering public infrastructure.
I'm wondering if we can just bring it more to the kind of the practical, from policy to practice here. And let's say there are potential proponents in the audience here of big projects who want to partner with you, and they don't know kind of how you get to decision points. Can you tell the audience, like when your investment committees meet, what are the 2 or 3 kind of questions that they would ask that would decide things in favor of one project or another? I mean, Philip?
Sure. So we meet quite regularly in the investment committee, but I would say, I would come back to the point of collaboration, like we need early contractor involvement for us to have a project that is interesting, because we need to influence the projects, we need to make sure that it's the right design, the right methods, the right materials. So if we are involved, we feel much more confident that's the right project for us in terms of investment. And in terms of size, I mean, maybe slightly different than my colleagues there, but it shouldn't be too big. Like, we don't want to bet the farm on a project. We want to manage the risk by investing portion here and there of our portfolio. So we want diversification. And I would say, it's kind of obvious, but to have a detailed and well thought budget, it's really important for us. Knowing the client, the partners, it's as well on top of our list.
Philippe, can you give us an example of where this model has worked for you? Maybe a project that we're familiar with?
I mean, I gave a few examples, but one example, I can come back to it, the Calgary office to residential conversion. So really, really nice. We know the partner, it's Stream. It's not too big, it's a $70 million project. We are involved in doing the budget, the methods, the construction approach. So for us, like, it's the perfect size, and at the same time, it contributes to build better communities, and it's contributing to affordable housing as well. So it takes our ESG criteria, which is also important.
Andrew, what is your investment committee looking at? What are the issues?
So risk return and relative risk return globally is a key aspect. What do those numbers look like on the page? But as mentioned earlier, taken in context of the commercial viability and also the social viability of a project. Does it make sense? Does it make sense for the users? Does it make sense for the government partner? What are we dependent on to earn that risk return? I think a second point that features a lot for us is scale and a path to scale in that investment. We're a large growing pool of infrastructure and energy capital with a relatively small global team, as mentioned earlier. So the path to material scale so we can be efficient in how we run our business is important. And I think an important part of that scale, it doesn't just need to be the upfront investment. We love opportunities where something might demand significant investment over time. So there's something initial to get a project going, but if it's a path to us deploying material capital over time, we love that because it's much better to support an existing business than it is to go out and then try to find the next one and the next one. That's a very hard thing to do.
What's a good return on investment for a pension fund, out of curiosity, for an infrastructure project?
Yeah, it really depends. It really depends because we operate in the full spectrum of opportunities from operating existing projects that have a much more stable risk return through to development projects. I think we're talking more on the development side here, so there's a commensurate increase in risk return, but it's really hard to have some specific number. But I would say our cost of capital is very similar to what other global pension funds are.
Duncan?
Yeah, I think I'll preface my remarks by saying that we tend to focus on the lower end of the risk spectrum. So we like lower risks and we take commensurately lower returns. So I'm not one of these hockey stick guys that is seeing a growth curve and saying what's going to happen in 5 years. Most of our investments are like a bond. The best you can hope for is to get your interest paid and your principal back. So we're pretty focused when we look at particularly PPPs, where we're focused. It's looking at optimizations or upsides and making sure you're aware of those, but it's a lot of downside risk. It's what could go wrong. So it's scenario testing. It's looking at not only financial risk, but reputational risk. We put a high value on sustainability and ESG, and so we don't want to be involved in projects that are against the common good. We want to have projects we're proud of. We want to have good relationships with our clients. So if we would rather have good investments at a fair price than fair investments at a good price. We aren't chasing fixer-uppers or problem projects that need someone to come in and clean up. We want high-quality projects and when we're prepared to pay up for them.
In the what could go wrong kind of bucket, what's an immediate red flag? I mean, all three of you can answer that question if you want. What's like, no way?
There's a tendency to think of infrastructure as a great investment for widows and orphans, and it's very low risk, high predictability of income. But I think the definition of infrastructure has probably changed in the last decade. And so some assets that historically have been seen low risk can be high risk if there's excessive leverage in the background and structuring and dividend stripping. And so you don't want to take what's fundamentally a low risk asset and through financial engineering juice the returns, but have an investment vehicle that's quite different. So that's part of it, is looking at what's an enhancement versus what's a risk driver. And then, as I say, I say to our team, if do you want to read about this on the front page of the Globe and Mail? So we want to keep a low profile. We don't want to be seen as having assets that are against the public discourse.
If Bob Fife is colleague, it's not a good day, right? Yeah. Do either of you want to take that question? What's red flag?
I mean, risk is definitely one. Like managing risk is everything in that industry. We've seen too many bad stories and bankruptcies, so that's one. Ethics, if there's a problem with the client or partners, we don't go for sure if we have a doubt. And if we cannot influence the whole project, because that's the value we bring to the table as the builder. So if we can influence the projects in a good way, then yes, it's interesting. If not, we pass.
For us, I mean, when we're pricing risk, we like revenue risk. We like to assess our ability to understand that and price it. I think if something's uncapped, from a cost perspective, I think that, that can be an issue. But I think the biggest red flag, the thing that would stop most things is, does the project make sense for what it serves, and what are the social aspects of the process? What are the affordability aspects of the project? We will not go into something that doesn't make sense for the user of the asset, even if the numbers are there in front of us and the project is available for investment.
Let's move to partnerships, in particular with Indigenous communities and the opportunities there. So, I mean, you've all worked on big projects. What's your experience working with Indigenous partners, and whether it's in project development, financing, investment, ownership, and just can you share some examples? We'll start with you, Duncan.
Yes. So as BBGI, we place a strong importance on ESG and sustainability. So looking at how our projects impact the Indigenous community has always been part of our mandate. And I think at 13 of our 18 projects in Canada, we have specific examples where we can show how we positively work with Indigenous communities. Sometimes that's consultation, it's cultural recognition, or it's economic participation. I think probably the projects that have the greatest impact on Golden Ears, we had 20 members of the Katzie Nation participating in the construction throughout that. It's a small community, so 20 people is actually a fairly substantial portion of the community that we would have provided more employment opportunities if there'd been more interest. So, and then that continues this day through the operator, Miller Capilano. John Hart Generating Station on Vancouver Island. We signed contracts during the construction, or during the development of the project. There were contracts signed for $40 million of work that was through Indigenous suppliers and contractors. And then we have a big Indigenous focus on at the Stanton Hospital, where we're serving a large population there, and we have a smudging room and a ceremonial room, and we've taken the learnings from that and brought it to Women's College and some of our other projects. But now, as part of the BCI, a group of companies, they place a very important significance on it. They recently won the mandate to oversee Four Pillars Society, which is, I guess, the money that was received from the federal government for 325 First Nations groups. So it's coming from the bottom up from us, but it's also coming from the top down from BCI now. So we're very proud of what's happening there.
Andrew?
Maybe to go next, I think partnership is the right word, and opportunities for partnership is the focus for us. When we think about what success looks like there, early engagement, important, that the concept of shared ownership, and then importantly, alignment. and alignment of interests. And maybe another thing I'd say is we don't have the same velocity of projects that others in the room might have. So for us, it's ongoing engagement and relationship development outside of major deals, understanding perspectives, understand what we might have coming down the pipe, understanding from broad stakeholder groups what might be important. So when we do have a project, it's not the first time we're coming to talk about partnership. And so that's worked well. Our largest and most prominent example is through a collaboration with Wolf Midstream, where we've brought a material indigenous investment into the access pipeline.
Philippe?
In our case, there was a lot of progress made. We're really proud of our relationship with the indigenous communities, but there's a lot of work to be done as well. In terms of progress, in 2023, we had 12 projects with indigenous communities. We were procuring $2 million only a year. Now we have 8 indigenous community specialists working with us. We're doing 25 projects with them, procuring almost $100 million a year. And I can give you a couple of examples. We're doing an ASEC project in Moncton. It's a research facilities for the Atlantic water and the coast. And 25% of the project is with the indigenous communities. The procurement is $60 million. So this is like terms that we agreed with the government. We're doing a project as well in Ontario, a big hospital in Moosonee on James Bay with the Cree communities. And I'm going to echo what my colleague said in a sense that it's about the partnership, and it's not about, I would say, money or even like buying equipment. It's about partnering with them by teaching them like how to work on hospitals, for example, how to work on larger projects. So they do hard works for us. They do. We've done piling with them, so we kind of partnering with them. And they can grow with the projects, and they can, do the work in their communities and even export elsewhere in Ontario what they're doing.
Okay. And I'm going to stick with you, Philippe. Another essential piece of project success is obviously execution, and execution will depend on capacity, especially. We have a government that is very ambitious. I think Jay in the previous panel mentioned that Deloitte report. Deloitte estimated that if Carney does everything that he's promising to do, we will need about 500,000 net new workers in construction over the next 5 years. If you incorporate kind of the retiring workers over the next 10 years, it could be up to 800,000 new hires over the next 10 years in construction. That's quite a tall ask. So, Philippe, a question to you. Even if we kind of work out the financing and regulatory hurdles to big projects, I mean, do we have the labor force to even, fulfill these ambitions?
So that number keeps increasing by the week. last time we've done a survey was 200,000, but yeah. So let's say between 3 to 800,000. It's a lot, and it's a top priority for us for sure. And I would say there's a perception issue about the construction industry. We've done a survey a year ago. Only 56% of respondents were recommending to their kids to go into the construction industry. 69% of the women were having trouble finding their place in the industry as well. So big issue in terms of perception, and I think we need to work on it as an industry. The government needs to help us, and Mr. Carney said it was a good time to be in trades, and I think he's right. I think he's right because there's going to be plenty of jobs for plenty of people, so we need more women, more young people, and I would say we need to change the perception of the industry. And one thing that comes out as well is that the people think it's unsafe to work in construction, but I can tell you it's become safer and safer. We have a group of 12 large construction companies that are changing the rules, upping the bars in terms of health and safety, and with all the innovation and technologies that are incorporated into the sites, in the near future, I think it will be almost virtually impossible to get hurt on a job site. It will be a very, very, very safe industry. And on top of that, we need to show how it is intellectually stimulating to work on these bridge trains, wind farms, hospitals. It's great, and then you contribute to the quality of life of the communities. It's a rewarding work, and people need to know that. And lastly, I think if you want to hire, let's say, 800,000 people in the next 5 years, we need targeted immigration. We're doing recruitment in England, France, Belgium. Now we're starting in Spain and Portugal. You know, they have a lot of good workers there, trades that are trained into big projects. And you know, we need to do targeted immigration to bring these so they can build Canada with us.
And is more of targeted in terms of going out there and finding the right workers, or do we just also need to increase the share of immigrants who have construction skills?
I think that's that. I understand there's a will from the government to limit immigration, but I think the percentage of immigrant that has a construction background should be increased definitely.
Andrew, and same question really. It doesn't even have to kind of be limited to labor. There could be supply chain issues as well that you're forced to deal with. I mean, what are your thoughts on these sorts of constraints?
Yeah, absolutely. I mean, super topical given developments, given how tight things are, and also developments in trade-related considerations. It's an impact both on new investments and also our portfolio companies and what our management teams of our portfolio companies are going through. I think we talked about financing and regulatory hurdles, but that ability to get things over the line and move things forward depends on these factors as well. A key consideration for us, it goes back to your question earlier on partnering, finding strong partners with expertise in these areas, very much as Philippe was describing, this being a key focus, the ability to deliver these resources and then doing it in the right way. Very encouraging to hear the focus on safety and how that corresponds with people being successful in this sector. That's critical for us in every portfolio company that we're involved with.
Duncan?
I think we're in an interesting environment because I think our relationship with the United States has fundamentally changed, and their relationship with the rest of the world has fundamentally changed. And whether you agree with it or disagree with it, there's no doubt that it is fundamentally changed. And I think that has created a unifying force in Canada for sometimes when the problem is so obvious or so much in front of everyone, we can get behind it. And I think we're seeing that from the federal government now, that a lot of these nation-building exercises, investing in our infrastructure is now a priority, and I think it has. There's a period now where it has sort of universal support to undertake these projects. And so I think what's the expression? Never waste a crisis. So I think the fact that we've got this situation is allowing us to perhaps address some of the critical infrastructure that needs to be delivered that might otherwise fall down the agenda. I think in terms of what Philippe said about building the capabilities from the delivery side is there, but I think it's also, there's work to be done on the government side, and I think it's, PwC recently did a piece in the UK, and in the UK, PFI is how they refer to PPPs, and it's really fallen out of favor, and they're revisiting how they deliver projects. And they came up with four recommendations for how governments can assist with it. And it's clarifying, standardizing, simplifying the delivery model is number one. Number two is committing to a stable pipeline and not only a stable pipeline, but a sequenced pipeline. So it's addressing the points that Tim made earlier about not having all the projects come at once and staggering it and knowing what the market can deliver. And then it's making sure there's the expertise on both the public side and the private side. And then finally, it's having some kind of mechanism to deal with and arbitrate the inevitable, these are partnerships. You need a dispute mechanism to deal with the inevitable problems that come around. But I think we got the right conditions for a very buoyant opportunity to invest more in infrastructure in this country.
Philippe, can I just have a follow-up question just on the labor stuff? Why aren't there more women in construction? I think the number is like 15% of the construction labor force is women. how can we get more women into the construction sector? I mean, safety could be one, I suppose, yeah.
Oh, safety, it's one. So, like, let's say at Pomerleau, we're 5,000 employees. A third of it is women, but on job site, it's only 10%. So I think a job site, first of all, there's a perception issue, like I said. So we need to change the perception. That's going to definitely help. And we need to, the health and safety, we need to make the job site safer, that's for sure. But also it's a matter of perception. So I think it's not true that all job in construction is physically demanding as well. So like with the technology, everything change, and there's place for more women for sure, young people definitely. So 10% is not enough, and if we need 800,000 people more, I mean for sure we need more women. Why? Like we need, and people are going to go in retirement. I think you said 300,000 out of the 800. It's huge. We need to replace these people. So we need to make sure it's more attracting as an industry for women and young people, I would say.
We have 7 minutes left. I'm not sure if there are any questions, but I have some more that I want to get to before we finish. I want to talk a little bit about innovation and the role of innovation in infrastructure. Is it becoming more important? I mean, how do you think about innovation in building, or I suppose even in finance as well when it comes to infrastructure? We'll continue with you, Philippe, and we'll go across.
Okay. Thank you. Innovation is huge in construction. We think it's definitely part of the future, and it's actually happening right now. And when we think about innovation, you can think about all the legal documents, all the estimation that can be done in terms of the pricing, the job, but also how much do you bid on a job. So we're working on both sides. Also like scheduling, how do you schedule a very complex like train project, for instance. AI is very, very useful for that. And I can give you a couple of examples that I like, but one is we've built a concrete plant for a client, a private client, and we've done digital twins for the 6 45 meters high silos that we had to build. And we're able to monitor real time with sensor, the elevation, the temperature, the inclination of the silos, and just with that, we're able to reduce construction time by 15% and the usage of material by 28%. So that's a big change, and the client was ecstatic. We even won a prize in Paris for that project. That was pretty cool. And also, we're doing another project in Squamish. It's a big LNG project, calling the Wood Fiber Project. It's multi-billion-dollar projects, 5 contractors on site, barges everywhere, heavy equipment. We're able to modelize 4D, all the logistics, the methods, and just by doing that, we save 10% in terms of efficiencies for us, but also the other contractor. The client was ecstatic. So all in all, there's a lot of technologies already, but it's only the beginning. And for us, the future definitely goes through innovation, technology in terms of the work we do, but also, like I said, health and safety.
Andrew?
Maybe not so much in the form of innovation, but just a bit of an evolution in how we engage. We have material capital that we are looking at with flexibility at scale. So how can we bring that to bear in moving the dial to get things off the ground? I think historically we've done development, we've done greenfield, but it hasn't been at the stage that we're necessarily talking about here. But I think we want to lean in and dedicate the time to working through things earlier. And maybe that combination of that flexibility and scale can help unlock something that might not otherwise have been previously.
Yeah, I would say we're embracing technology at every opportunity that we see it, that it's economically viable. A recent example is on our road portfolio. We've started putting all the asset managers. We have a system where they have a small camera that goes under their car as they drive the road. It takes video of the road surface so we can see crack progression over time. It builds a digital model, and then it helps us evaluate rutting, IRI, deflection rates, and it all takes that information, builds a predictive modeling to help us. it also means that the asset manager is not standing on the side of the road with a high visibility vest, sort of looking at a crack. So it goes to Philip's statement about making it safer. And it's very inexpensive for us to do this. And so we have real-time data now. That's just an example. We're looking at other areas where we can do that and just be more efficient in how we manage and deliver infrastructure.
And if I can add to that, just innovation in terms of what the government is doing for private financing is one interesting thing we're seeing with this new government. We're in discussion on how to build school, let's say, with shorter lease, so they're off balance sheet for them. Yes, it's accounting and finance, but if it helps a project get off the ground, that's amazing. They also launch RFPs for to build infrastructure, utilities on the ground, energy loop that would be built, operate, and financed by private developer and contractor. Like there's 5 of these projects, but there's many more to come as there are $1 billion of underground infrastructure to build. So I like innovation from the government. It's just the beginning, I hope so, because they need to attract more capital, I think.
Okay, great. We have 2 minutes and 2 questions, so why don't we just get to them very quickly with quick answers. Do tolls and user fees make a P3 investment more attractive to capital markets? Quickly.
I mean, it goes back to a point I raised earlier on, doesn't have to be zero risk. We're happy to lean into risk and price it accordingly. If the investment makes sense and the fees are sustainable, we think that's a model that can be very helpful in financing these investments.
Yeah. Next question. Do capital markets have an appetite for more collaborative delivery models like alliancing when such models can tie up substantial cash flow for several years?
Like collaborative model, we do like I said, as we are involved at the beginning at the table with the architects, the engineers, the clients, and we can develop our own solutions for the projects to make it more efficient. And in terms of tying up cash flow, I think there's new way to structure financing and cash flows to make sure the cash flows are as less tied up as possible. But if it makes sense, it makes sense. But for us, the point is collaborative model is definitely part of the solution as we're a partner with the owner.
I'll jump in on that one and say that one of the benefits of going from the public markets to the private market is there's a lot more flexibility. We have one investor now, and they look at the economic return over a period of time instead of trying to worry about quarterly or semi-annual dividends. So it gives us a lot more flexibility to be nimble and make the right decisions.
Yeah, I'll just add to that. People like us don't need near-term yield. We can take a longer-term cash flow.
Just quickly, last question. Just a sentence or two answer would be fine. Canada. I want to end on a positive note. What is Canada's? We can be negative here in this country. What is Canada's advantage when it comes to infrastructure? Where are we unique in a positive way?
Can start. I think we have a vision, especially with this new government in place. We have a vision for what this country can look like. We have, of course, lots of natural resources that we're using and we can use more. So this is definitely a positive. And I would end on the note that, with all this discussion, to me, it's all very positive. Future is bright, but it also needs that we need to find new ways to build, collaborate, and invest together. So talking about the innovation of the government, what they can bring to the table, somehow very important.
Andrew?
We have all the foundational aspects that makes Canada a good investment destination. We have the need and the will. Right now, we have a country that lends itself to significant infrastructure investment, given the geography, given the resource focus. So that should all align to create material opportunity.
Duncan?
I think Canada punches well above its weight. One of the benefits of being a global fund is that we participate in other markets. And as a Canadian, it's easy to sort of say, we're not doing a great job. And then when you go outside of Canada and you see how infrastructure is being delivered in other areas, you recognize how well it's being done by a lot of the people in this room. And so I think we have something very much to be proud of. In the P3 space, Canada's a world leader now. There's no question about that. And PFI started, arguably in the UK, and there was a lot of focus on the UK. Now it's come full circle where the folks in the UK are trying to revitalize it, and they're looking at Canada as the leader that they want to emulate. So I think there's always bumps in the road, but I think Canada's done a great job on delivering critical infrastructure projects.
All right, that's a great sentiment to end this panel on. Thank you very much. It was a lot of fun, and thank you for listening.